Welcome and get ready to dive into the thrilling world of investments, where numbers dance, money talks, and the unexpected always keeps us on our toes. The U.S. markets finished July on a positive note, as both the S&P 500 and Nasdaq achieved their fifth consecutive month of gains. But now August is here, and that is often associated with volatility for markets. This largely because so many investors take vacations and there are decreased trading volumes. According to data from Morningstar, dating back to 1986, August has consistently ranked as the poorest performing month for stocks on average. August 2023 is no different. In the U.S., all three major equity indices took a nosedive from their July highs. Adding to the bearish sentiments are the news that Fed officials see upside risks to inflation possibly leading to more rate hikes, and from Fitch that the rating agency that they may downgrade a number of big banks, including JP Morgan Chase. With the market pulled back, where does that leave us? Today we are going to talk about a stock that has experienced pressure in recent weeks but may present a good entry point for long-term investors. That stock is none other than Tesla. We'll take a closer look at Tesla's recent performance, its strategic moves, how it's valued, and the opportunities and challenges it faces. Just days prior to Tesla's 2Q earnings, Cathie Wood's ARK Investment Management, which has been a longtime big cheerleader for Tesla, sold around $21 millions worth of Tesla stock. Additionally, David Tepper's Appaloosa Management disclosed in an SEC filing that it sold its Tesla stock stake in the second quarter after initiating the position in the first quarter. Tesla is currently trading around $215 per share. Its price dropped more than 25% in the last month, but is still up by close to 100% year-to-date. Looking at the valuations, Tesla stock is by no means a cheap stock even after the pullback. Its PE ratio is well above 60, and its price-to-sale ratio is above 7. Both of these metrics far exceed the industry's averages. Looking into Tesla's most recent earnings release, it is clear that the company's revenue has been steadily increasing while its growth rate has slightly slowed down. The company's net profit margin actually declined on a year-over-year basis, and that stirred quite a bit of concern among analysts. While analysts are concerned about Tesla's falling margins, Tesla is doubling down on cutting its EV prices several times in 2023 to boost demand. So far, it is working, as we see the number of Tesla cars sold in 2023 easily beat the same period in 2022. Once a customer buys a Tesla car, he or she will rely on the Tesla charging network for charging, for car maintenance and service, and maybe even install a Tesla solar roof to generate power at home. Selling the Tesla car to customers is in a way like getting that person an iPhone. You introduce him, her to the ecosystem, and the person will be in the ecosystem for a long time. Even though the profit margins take a hit in the beginning, think about how much revenue it will continue to bring to Tesla from this customer in the next 5 to 7 years. That is the strategy Tesla is taking. The company is giving up profit margins for the current period to sell its EVs to the mass market. In order to do so, the price must drop, especially in markets like China, where there are a number of strong, domestic EV car makers. This week, Tesla lowered the price for Model Y and Model 3 again in China, and launched cheaper versions of Model S and Model X in the US. The cheaper Model S and Model X offer shorter ranges compared to their more expensive counterparts. The new standard range Model S has a range of up to 320 miles, while the standard range Model X has a range of up to 269 miles. These versions have the same battery pack as the long-range models but are software limited in terms of mileage. Some analysts are again concerned about this announcement because, to them, the lowering price may impact Tesla's margins. But I see it as another step Tesla takes to increase the market share. They are addressing the needs of urban dwellers who primarily use their vehicles for commuting rather than long-distance travel. By offering a more affordable option with a shorter range, Tesla is expanding its market reach and making electric vehicles more accessible to a larger consumer base. This strategy aligns with the company's goal of building an ecosystem around electric vehicles and expanding its charging network. Later this year, Tesla is expected to introduce other new products like the highly anticipated Cybertruck and refreshed Model 3 Highland. Words from Tesla Giga Shanghai insiders believe that Model 3 Highland mass production has started, with 10,000 vehicles targeted each month. Speculation also suggests that Model 3 Highland could be 14% cheaper to produce, which translates to around $28,000. If confirmed, this is a big milestone for Tesla, as this could be the first real mass EV that is under $30,000 for them. While Tesla faces challenges in the current market environment, its focus on expanding its market reach, building an ecosystem around electric vehicles, and its potential for future growth make it an attractive buy for long-term investors. Wedbush analyst Daniel Ives, a longtime Tesla supporter, sees this pullback as a potential opportunity. He compared Tesla to Apple in the late 2000s, when it started to monetize some products, and raised his price target to $350 a share following the 2Q earning release. We view Tesla where Apple was in the 2008-2009 period, as Cupertino was just starting to monetize its services and golden ecosystem, Ives wrote in Thursday's research note. We view this quarter as a major step in the right direction, as Tesla is playing chess while others play checkers. Looking ahead, Tesla's stock price will likely be influenced by both the market's overall sentiment as well as the company's sale for the new Model 3 Highland. As long as risk-off is spreading among market participants, Tesla as a growth stock will likely face selling pressure. On the other hand, if the debut of the new Model 3 Highland and Cybertruck could bring big demands for people who were on the sideline before, the fundamentals will remain in Tesla's favor. Thank you for tuning in to our discussion on Tesla stock and whether it's the right time to buy. We've explored the recent pullback in Tesla's stock price, the concerns over falling gross margins, and the optimism expressed by some analysts about the company's future prospects. If you enjoyed this video, be sure to like, subscribe, and hit the notification bell to stay updated on our future content. Make sure to leave your thoughts and comments below, and we'll see you in the next video.